All right, so step 4, choose your bookkeeping tool. So this is it's an easy-ish step, right? But important in terms of how you're going to track your information. So we'll talk about the main ones, which are, basically manual or some sort of electronic bookkeeping tool, right? So manual tracking includes using programs such as Excel or actually tracking on paper. I highly would want to discourage anybody from tracking on paper for several reasons. But in general, doing it manually is okay for a company just starting out that may have a few transactions within a month. Basically, you only have a few transactions. It won't take you that much time to do it manually. But you do have to have a solid, a decent understanding of the financial statements and a decent understanding of some of the accounting principles that we talked about, such as whether or not you're going to do single or double entry method accounting, and whether or not you're going to use cash versus accrual basis, right? So you would have to determine that and make sure that you're consistent in how you're tracking that based on that determination that you made. One disadvantage is that you're, susceptible to a lot of manual errors, which can technically sort of happen even in a software. But when I say manual errors, like maybe doing double entry, but you did the double entry incorrectly, versus, a software would kind of solve for that. So you would definitely want to review and reconcile your information when possible, whether or not you're using Excel or doing it on paper. I, again, do not recommend physical sheets of paper. Aside from the fact that I just really personally don't like paper, but for the sake of keeping your records, right, and being able to keep the information, what if something happens, right? What if you lose that piece of paper? What if, what if a fire happens wherever it is that you're storing this information? If that's the place that you're storing it, it's gone. So one thing that I would recommend in terms of I would highly recommend, if you're going to do it manually, use a tool like Excel. And even if you use Excel, I would definitely recommend using some sort of cloud storage to save your documents, right? So then that way, no matter if someone steals your laptop, right? Breaks in your car, steals your stuff, breaks in your house, I don't know. All of your information is not gone. You will be able to still access it somewhere. When I say cloud, I mean, Microsoft, if you use Microsoft Office OneDrive has cloud storage, Google has storage. Granted, it's only free up to a certain amount, so it depends on how much stuff you need to store. And when Google, like Google Drive, so if you have a Gmail account, they have free storage up to a certain amount where you could store some of your documents there. iCloud for those who are Mac and Apple users. Either way, please store your documents on some sort of cloud-based system so that you're never in the position of losing something, because you would hate to lose your information. And the same actually goes even if you aren't doing your accounting manually on paper. I would still suggest, even when it comes to, for those of you who are using software, uploading, scanning in your receipts and things like that, especially big purchase receipts, things that you need to save, things that you need to make sure that you would give your accountant to do your tax returns. Make sure you have that scanned in and saved somewhere too, because again, if it's a piece of paper, you hate to lose it. And God forbid, you'd hate to get audited and then not have proof of that particular purchase or that particular transaction. So again, digitizing things as much as possible is huge for me. Then we have our electronic bookkeeping tools, which we talked about, and I'll go into them a little bit more later. But you have your free tools, which is Wave is one, and then ZipBooks is another. Those are the top two that I found, top two free tools. Now, keep in mind, they're free up to a certain point, and then beyond that, you do actually have to pay for them. But again, we'll kind of go through some of the pros and cons of both of those. And then, of course, you have your paid tools. So you have your QuickBooks Online, QuickBooks Desktop, and they have a few other services that they offer. I think one is called Xerox, but QuickBooks seems to be the main tool that most businesses use, and it's a very popular resource. Oh, one thing, if you're using Excel, because I put this as a note, if you're going to use Excel, I would recommend using the auto save feature. to make sure you don't lose anything. Because again, you would not have wanted to enter in all of your transactions for an entire month. Your battery die or, or just something happens and you lose the information. So definitely want to make sure that you're able to do that. Anybody, if you wanted to sort of put in the chat, I think one person was using QuickBooks. Anybody else using QuickBooks, you can either just give me a thumbs up or an electronic bookkeeping tool. Okay, Natalia uses Excel. Perfect. Oh, okay. Right, Chelsea getting ready to do QuickBooks Online. Okay, so this is an Excel version, Natalia, so maybe this is helpful. And I'm not sure if you have yours set up quite like this. But in Excel, if you wanted to, this is for the balance sheet. And remember, we were talking about balance sheet versus income statement, because there's going to be certain transactions that will affect the balance sheet, certain transactions that will affect the income statement. And so these are some of the accounts, some sample accounts that you would have in the balance sheet, right? In our examples, we were talking about the accounts receivable, right? So that's where, I think in one instance, we credited that versus debited that, or the cash based on the accounts receivable and the transaction. And so this is a template which I can upload after the fact for folks who don't have anything and want to give it a try in terms of accounting. And Natalia, do you actually currently use single entry method or double entry on Excel? If you could let me know in the chat. Single, okay, perfect. And are you doing cash or accrual? Does it? Okay, good, Natalia. Cash, perfect, okay. And then this is your income statement sort of chart of accounts. And so same thing, you would want it differently because it's the income statement. And so one thing that the electronic tools will do for you is that you would just put in your transactions, or actually, and we'll get into that, you don't even put in your transactions, you will sync your accounts up to that particular online tool. Even some of the free ones allow you to do that as well. So sync your business. This is also another reason why it's helpful to separate your personal and your business financials. So it will sync in, and all of the information will come into the program. So all you have to do is assign it a account, basically. So you'll say, oh yeah, this was a sale, or oh yeah, this was a cost of good expense, or this was a rent expense or an insurance expense, that sort of thing. That's one of the huge benefits of doing it online, but we'll get into that, is the ability to sync it to your business banking account. If you're just diligent about making sure all of your, purchases, all of your business expenses flow and revenue flow in and out of that account, then a lot of that stuff, a lot of the manual entry of the bookkeeping process can be done by the software, and all you'll have to do is actually just label it. And so that will save you a lot of time, a lot of time monthly, trust me. Trust me when I say. So let's get into some of the electronic bookkeeping tools. So I mentioned earlier, some of your free tools is Wave. So Wave allows you to connect unlimited bank and credit cards to your account and have guest contributors. So what that means is exactly what I was saying. When it comes to even QuickBooks, I recommend the online version because, again, you can connect your bank accounts to the desktop version too. But that between that and having the guest contributor function is huge. And so, again, instead of literally what some of us are having to do manually in Excel, right? We're saying, okay, I made this purchase on 9/24 for a printer for $200, and I got to go log it in. I have to put it. I have to credit my cash and debit, my assets for this account. Whereas if you purchase it on your, let's say your business account debit card, it will come in automatically into a system. And so that's what Wave will allow you to do, to come in. And again, all you have to do is say, oh, this was a office supply purchase, right? And it'll kind of it will determine what is the appropriate financial statement to tie it to based on the account that you use. And we'll go over that when we talk through chart of accounts. There's a small fee with Wave if you want to collect payments from customers online, which is fair. It's just like Square, PayPal. You do have to pay a fee to collect payments. ZipBooks is another one, very similar to Wave. The one thing is its platform itself doesn't allow for you to accept customer payments. So you would have to use PayPal or Square. And I think those are the only two third-party vendors that it connects with. And then you can only connect one bank account, which is maybe not a big deal if you only have one business bank account. But let's say if you have a business bank account and you have a business credit card, that sort of thing, when you use Wave or even QuickBooks Online, you can connect those, both of those accounts to into your QuickBooks system. So QuickBooks Online, similar to Wave, it syncs to apps and makes tracking simple. I think, what QuickBooks has over some of the free tools is just it's a little bit more intuitive, but it's also that it's connectivity, right? It's a scalable software, number one. So as you grow in your business, because QuickBooks, even online and in general, has different, basically it has different stages in which you can purchase into. So basically, according to their website, the Simple Start, which is, I guess, is their more basic version of the software, is $25 a month. Then Essentials is $40 a month, and then so on. So based on what you need, Advanced is at like $150 per month. So it is a scalable software, number one. So you wouldn't have to go out and say, oh, let me switch to a completely different software if you needed a different version or a more complex and advanced version of that software. And then the biggest thing is it's such a known name that it integrates with a lot of other applications, right? So it integrates very well with Square, with PayPal, just with all of those other types of applications. And that is helpful if you're, accepting payments in those different ways. Online, same thing about cloud storage versus like just storing it directly on your desktop. To me, is the main difference between online and desktop. Is that you can also have multiple contributors. What that means is if you decide that you've scaled up and you need an actual bookkeeper and you have a bookkeeper, they can log into your account and get the information that they need. You can have your secretary, like whoever, if you have someone just logging in transactions, you're able to have different people have access to the account who may need to have access. If you have your accountant who's doing your taxes once a year, you can also give them access to your account. And you can limit what they have access to and what they can do based on their profile. So that's the other thing. Don't think that it's just like, oh, they get to go in and just do whatever to your account. No, you get to determine whether or not they're an administrator and what their role should be as it relates to having access to your account. So the biggest difference between desktop and online is obviously accessibility, and then pricing structure, as well as storage. And so online, you can have up to 25 users. Desktop, you have to pay per the number of users that you have accessing the information or accessing your account, excuse me.